The Stock Act represents a legislative effort to bring transparency and accountability to the financial activities of Congress members. Passed with bipartisan support, this law requires politicians to disclose their stock trades, intending to prevent insider trading and conflicts of interest. However, despite its noble intentions, the Stock Act has faced criticism for its limitations and enforcement challenges. Critics argue that the disclosures, though a step forward, still allow for significant delay, giving politicians a window to profit from their insider knowledge without immediate public scrutiny. Furthermore, the Act does not fully address the potential for indirect benefits, such as trades made by spouses or close associates. These loopholes suggest that while the Stock Act lays the groundwork for ethical trading practices among politicians, there's a pressing need for stronger regulations and more rigorous enforcement to ensure that those in power cannot unfairly benefit from their positions. The allure of the stock market is not lost on political figures, many of whom have significant investments in various sectors. While some may argue that politicians have the same right to invest and secure their financial future as any citizen, the crux of the controversy lies in their access to sensitive, non-public information. This unique position raises the question: can politicians genuinely engage in stock trading without crossing ethical boundaries? Proponents of politicians' right to trade argue that with proper regulations and transparency, potential conflicts of interest can be mitigated. However, detractors highlight the inherent risk of insider trading and the difficulty in separating public duties from private financial interests. This debate underscores the delicate balance between ensuring financial freedom for public servants and maintaining the public's trust in their decision-making processes. In the spotlight was Nancy Pelosi's husband's significant investment in Nvidia, which came just before a critical vote on legislation beneficial to the semiconductor industry. This investment drew public attention not only because of its timing, but also because of the potential for insider knowledge to have influenced the decision. The incident raises questions about the fine line between coincidental market moves and the advantage gained from privileged information. While no legal wrongdoing was found, the case exemplifies the ethical gray areas that can arise when personal investments intersect with public policy decisions. Senator Tommy Tuberville's engagement in trading agricultural futures while sitting on the Agriculture Committee presents a textbook example of potential conflict of interest. His investments in commodities directly related to the committee's focus area spotlight the challenges in distinguishing between informed trading and insider trading. Critics argue that such actions, whether legal or not, undermine public trust in the impartiality of legislative decisions and highlight the need for clearer boundaries and stricter oversight. Representative Nicole Maliotakis's timely investment in New York Community Bank, just before it announced a significant acquisition, exemplifies the controversy surrounding politicians' stock trades. The substantial gain realized from this investment underscores the potential for conflicts of interest and the perception of insider trading. This case, among others, fuels the ongoing debate over whether current laws and regulations adequately address the ethical considerations and potential advantages politicians might have in the stock market. The ethical concerns surrounding politicians trading in the stock market center on the potential for conflicts of interest and the misuse of insider information. These activities, even when legal, can erode public trust in elected officials, as constituents might question whether decisions are made in the public's best interest or to benefit personal portfolios. The perception that politicians could have an unfair advantage in the stock market not only diminishes faith in individual lawmakers, but also in the institutions they represent. Restoring public trust requires not only adherence to the letter of laws like the Stock Act, but also a commitment to the spirit of transparency and accountability. As the debate continues, it becomes increasingly clear that ethical guidelines and public perception are pivotal in shaping the standards by which politicians' stock trading activities are judged. The intersection of politics and personal financial gain presents a real and present danger to the integrity of public service. When politicians trade stocks, particularly in industries they regulate or legislate on, they walk a tightrope between legal investment practices and ethical breaches. The potential conflict of interest arises from the possibility that lawmakers could influence legislation or regulatory actions to benefit their financial interests. Such scenarios not only compromise the lawmaker's integrity, but also undermine public confidence in the legislative process. The challenge lies in crafting a regulatory framework that allows politicians to manage their finances without compromising their duty to serve the public interest impartially. The Stock Act while a significant stride toward transparency, has not fully stemmed the tide of ethical concerns surrounding politicians' stock trades. The Act's limitations are evident in the delayed disclosure requirements and the ability of lawmakers to navigate around its provisions. Loopholes that allow for indirect trading through family members or complex financial instruments highlight the Act's inadequacies. The ongoing discovery of these loopholes has prompted calls for reform, including proposals for real-time disclosure of trades and stricter penalties for non-compliance. Addressing these gaps is crucial for restoring public faith in the political system and ensuring that those elected to represent the public are held to the highest standards of ethical conduct. The United States is not alone in grappling with the issue of politicians engaging in stock trading. A comparative look at how other democracies handle this challenge reveals a spectrum of approaches, from outright bans to stringent disclosure regimes. For example, some countries restrict the types of investments public officials can make, while others require divestment of certain holdings upon taking office. These international practices provide valuable lessons and potential models for reform in the U.S. by examining the successes and failures of other nations' efforts to regulate politicians' stock trades. American lawmakers can explore new strategies for enhancing transparency, accountability, and public trust in their financial activities. Amid growing public discontent, calls for reform echo through the halls of Congress. Legislative proposals range from tightening disclosure requirements to outright bans on stock trading by politicians. These reforms aim to restore faith in political integrity, ensuring those in power cannot unfairly benefit from their positions. The intertwining of stock trading and policymaking raises concerns about the impartiality of legislative decisions. When politicians have financial stakes in the outcomes of their policy decisions, the purity of their motivations is questioned. Striking a balance where public servants can manage personal finances without compromising their duty to the public is a complex but necessary endeavor. Diverse voices from political, ethical, and financial fields offer varied perspectives on the issue. While some advocate for strict prohibitions, others suggest more nuanced approaches to ensure transparency and accountability. This amalgamation of views enriches the discourse, offering a multifaceted understanding of the implications of politicians trading stocks. Public pressure and advocacy play pivotal roles in driving transparency and ethical conduct in politics. Grassroots campaigns and watchdog organizations are at the forefront, demanding reforms that hold politicians to higher standards of accountability. Their efforts are crucial in shaping a future where public service and personal integrity are not at odds. As we gaze into the future, the trajectory of regulations governing politicians' stock trades appears poised for change. Thank you for joining us on this comprehensive exploration. If this deep dive has sparked your interest or concern, don't hesitate to like, share, and subscribe to Legacy Lift Network. Your engagement helps us uncover and discuss topics that matter, fostering a community of informed and empowered citizens. Stay curious to stay informed, and let's continue to uplift our collective legacy through knowledge and vigilance. See you in the next video.